PV input tab and the battery input tab are both organized into similar sections, as you'll see by these main headings. Market, SREX, well that's PV only. Operational considerations, performance considerations, pricing considerations. There's a financing section. Then we have tax implications, rebates and incentives, system costs, and then the financial metrics up here at the top. Both the PV input tab and the battery input tab have these cash flow charts and the revenue stacks so that you can see the effects of changes in real time. So let's zoom in a little bit and take a look at the first section. The first section of the input tab is the market characteristics. This is where you'd put in the relevant information for the type of system that you're interested in, whether it's commercial, hybrid, PV only, or battery only. Also, this is where you say what year the system will be installed for the sake of rebates, primarily, that are time sensitive. This is also where you put in the retail cost of electricity, if you have an escalator, what the customer's tax rate is, and then the discount rate and the reinvestment rate, which are utilized for the ROI and the internal rate of return calculations, as well as net present value. What you notice as I click through these is that almost every single input has this notification box that pops up with a little bit of a descriptor about what this input is or how it would be calculated. Because we've done that for every single input, I'm not going to bore you with a video that has me basically reading all of them. So as you work through the tool, take a second to read these input messages, and they should help you out if you ever get confused or maybe you can't remember what something is. What's important to notice here as well is that the market tab is all green for inputs on the PV tab. But if we go to the battery input tab, and I zoom in, you'll notice that they're all gray. The reason they're gray is because these values are formulas because they're pulled from the PV input sheet. So if you ever see a calculation cell that you think should be an input, you can go up to the formula bar and it will tell you, well, that input is actually coming from the PV in tab, cell D8. So let's go back to the PV in tab and go to the next section. SREX. This section is obviously PV specific because it's a solar renewable energy credit. So this is a performance-based incentive that is calculated on a dollars per megawatt hour of energy generated by the PV system. The HybridFAST tool allows you to have 3 different contract periods in case you picture some volatility in the market, or if you're a developer and you've already locked in some contracts, perhaps you have a contract locked in at $150 per megawatt hour, but you only have that for 1 year. You would put that in there, and then years 2 through 16, as this is shown now, would be at $12 based on the values we have in here. You can also pick whether or not the SREX are taxable. They can be taxable or non-taxable depending on what type of customer you have. Maybe you have a government institution or a university that's not taxed and they're not going to be taxed on the income from SREX. So you can make that adjustment here. The next section of the PV input tab is system information operational. This is where you input kind of the physical attributes of the system. And for a PV system, it's really quite simple. What we're primarily interested in is the nameplate DC capacity. So the PV size is based on kilowatts DC. So that's the sum of all the solar panels installed. Also in this section is the ability to turn on multi-port inverter. So if you select yes, you'll see this section becomes active, and this allows you to account for efficiencies and some energy trade-offs that happen when you do DC coupling systems. So I'll set this back to no, and we'll move on. After the operational considerations is performance. So base capacity factor, this is where you would put in how much energy your PV system is expected to produce based on the size of the system. As we've mentioned, this isn't a design tool, and there's many different ways for you to get this number. We generally recommend using PV watts, though some people may do it with PVsyst or some other analysis software. But once you have that value for your region and your standard tilt and orientation, you almost don't ever need to change it. So we don't have the capability built into the tool to select solar modules and inverters and all sorts of system specifics like tilt and azimuth and what type of racking, because it doesn't make that much of a difference, especially if you're trying to quickly look at a bunch of different systems. This value is, I don't want to say it's a ballpark, but once you get your estimate fairly accurate, you'll notice through multiple iterations of calculations that the magnitude of change from this number is not always that significant. So we've done our best to simplify it just to your capacity factor of kilowatt hours AC per kilowatt installed DC on an annual basis. Adjusted annual performance, this value comes from, well, as you can see by the units, kilowatt hours AC per year after battery services. And what we mean by battery services is, in certain situations, you're going to be charging your battery from the PV system. So you need to subtract those kilowatt hours that go into charging the battery from your avoided cost of electricity. So that's what this calculation does. Performance after 25 years. This is basically pulled from the solar module's data sheet and the module's warranty. So these modules do degrade over time, and different manufacturers have different ratings of how much energy is expected after a certain period of time, and that's how you can account for it right here. After you have your performance factors included in the tool, you move to pricing. As I've touched on briefly earlier with the advanced tab, if you have the pricing method as simple for the PV system, you're going to be looking at a turnkey price that's input right here in this cell. So right now we're showing a price of $1.40 per watt DC. And you may be thinking, hey, that's really low. Well, or maybe you're thinking that's really high. So we don't know. We're not trying to suggest anything by the default values in here. We simply provided values that are reasonable and are within the appropriate magnitude. So it's helpful to look at this price right here, $1.40 per watt, and you'll know that, well, I'm probably not putting in $55,000 because that's what the system costs, because that's way out of line with the magnitude of $1.40. So you can look at $1.40 as kind of a hint to what value you want to be putting in here. These gray cells have to do with the functionality of the advanced tabs and how the calculations work in the background, and you can look at the formula bar. But generally, if it's gray, you can just ignore it, or it's an informational note. So right here, this cell is telling you that's your total system price. $1.40 per watt times 500 kilowatts equals $700,000. This section also lets you put in some other pricing and expense inputs, such as if you had an inverter replacement scheduled in the future, whether or not you're expecting operations and maintenance costs, and also insurance expenses. Financing we'll touch on in the use case example videos, so I'm not going to go into it now, but it does exist. This is where you would enter financing information for your PV system. Then we'll move directly to the right with tax implications, rebates, and system costs. The tax implications section is where you account for some of the tax situations that may be pertinent for your analysis, whether or not the customer is writing off electricity, if they're planning on taking depreciation, if they're planning on taking bonus depreciation. And then directly below that is the rebates and incentives section. The first row here, local rebate, is if, for instance, you had a local rebate that was available. And in order to take advantage of that and model it, you would pick one of these two options, either dollars per watt or percent of cost. And these would be capacity-based incentives that are going to be received effectively as cash rebates. So you would either put in dollars per watt, percent of cost, the appropriate unit here, and then whether or not it's taxable. You can also then throw on top a cash-based grant, and then right here is where you select whether or not you're receiving the investment tax credit. System costs, it's kind of down here hidden in these grayed out cells, and you would think that that's a really important variable, but we've found that system cost is often not as important as cash flow and return. So we simply have it down here recorded. This is also the section that figures out how much money you would need to take out from a loan, or if you had a down payment or you were front loading expenses. And then further, these doubly grayed out sections are where the tool is calculating in the background the implications of having grants and then doing depreciation and taking the investment tax credit. Because if you take a grant or you take the ITC or you depreciate your asset, it's going to change your bases for the ITC as well as makers. So for depreciation, your depreciable basis will decrease if you received cash-based grants, and that's accounted for down here. So next we'll move up to the top. This is kind of the heart that I think of the HybridFAST tool. These are the financial metrics and the cash flow chart. This first section right here is period of analysis. You see it's set to 20 years now, and that makes a lot of sense for a PV system. Some people were interested in how the PV system is going to perform for 25 years. Well, you could simply change that, and now your metrics change and your cash flow chart changes. Let's Control Z back to 20 years, and then we could also maybe just put in, maybe we're only interested in 10 years. And you'll see as we change this value here for the period of analysis, your ROI and your internal rates of return and net present values also change for this time period. The payback period won't change, so whether it's 4.08 years in a 10-year analysis, if it's a 20-year analysis, it's still a 4.08 year payback, and that's because the payback values have to do with when your cash flow becomes positive. So effectively, you can visualize that by looking at the PV discounted cash flow curve and seeing that it crosses the x-axis at 4.08 years. So your system has paid back. You've received enough revenues and cost savings that you've covered all your expenses, and now the system's starting to make money. So that's just a brief little look at how the cash flow chart can be used to figure out payback. Obviously, it can be used for many other things beyond that, and we'll go over that in more detail in the use case videos. But the cash flow curve is really useful to kind of do a forensic look at what's going on in your system. So you see these steps here. Well, those are your depreciation benefits kicking in. This big step right here, the large majority of that is your ITC. So that's your receiving a return from the investment tax credit at the end of year one. And then there's no red or blue lines because we don't have a loan turned on.